Thank you for joining us, and welcome to the latest episode of our Franchise Readiness Series, where we help people considering the path of business ownership understand the options and opportunities available and how franchising could be the choice that works for them. I'm your host, Trent Huey, Vice President of Franchise Development at Neighborly. I work with people to help them realize their franchise ownership dreams. Over the years, I've helped hundreds of people, like you, get started on the path to franchise ownership and achieving their professional goals as a business owner. I have three very special guests today from some of the top financial firms focused on helping business owners get funding to finance their businesses and franchises. First, I'd love to introduce Dan Pace, founder of First Financial. Dan, take a couple seconds, tell us about yourself and a little bit about what First Financial does.
Certainly, Trent. Thank you for having me aboard. I appreciate it, and thank you to the Neighborly Group. It's always a pleasure. First Financial was started 25 years ago. Seems like just yesterday, but it was 25 years ago. Primarily in the equipment leasing industry, but we expanded over the years into SBA and conventional lending. We have been working in the franchise industry for 30 years, to be perfectly honest. I'm an entrepreneur myself, so I come back and we built the company based off of helping people become and go into business. So the company itself really promotes and goes after the SBA market because we know it so well. And we've been successful. And if we weren't, we wouldn't be here with you, right?
That's right. Thank you. Thank you so much, Dan. Second, I'd love to introduce Shirley Kefkin from Fran Fund. Shirley, tell us a little bit about yourself and what your role is at Fran Fund.
Yeah, Trent, thanks for having us here today. So Fran Fund really exists to bridge the gap between aspiring entrepreneurs and the capital that they need to make that entrepreneurial dream a reality. So we help folks to obtain SBA loans, government guaranteed small business loans. We assist with the rollover for business startup, where you can access retirement dollars without taxes or penalties to invest into the business. We help with equipment leasing, unsecured credit. We'll talk with folks about home equity lines of credit. So really our goal is to help folks get access to the capital they need to really become business owners.
Wonderful. Thank you so much. And last and certainly not least, love to introduce Sam Phelps from Tenet Financial. Sam, tell us a little bit about yourself and what Tenet does.
Trent, appreciate it. My name is Sam Phelps. I'm with Tenet Financial Group, and we're a financial consulting firm, and what that means is we're client-based. We focus on our clients, focus on their needs, bridging that gap like my other colleagues said here earlier. I get the luxury of going third to say that we offer the same things, but we just try to put you first and make sure that we accomplish your goals, whether that's an SBA loan, accessing your retirement, or just going through the other steps with all our funding options. So happy to be here.
Yes, glad to have you here. So welcome all. We're looking forward to learning more about this topic and learning more about how you help people like our viewers get into business ownership and particularly franchising. So panel, let's get started. So what are some of the most typical situations that you help people out with when it comes to helping them get started in business? Dan, kind of give us your take on that.
Okay. It's actually multifaceted, trying to be honest with you. When we're dealing with the clients, they're in that new stage. Most of them have never opened a business before, operated a business, or understand anything about the process of acquiring a loan. They try to interpret it towards getting a mortgage, but it really is not. There's a simple process that you take people through, and we have structured it out to the way where that first initial call, if it comes from a franchisor, from a consultant, or from our web-based marketing campaigns, we first talk to them and try to understand what their goal is going to be. And then we take them from that stage. What loan product really is going to fit your needs? Where are you thinking of putting it? It's multiple things, but we work them through it. And we have what we call relationship managers. It's just a fancy title, to be honest with you, but I do like it, I have to admit. And those people take over and help them understand each process, because education is very important when you're applying for a loan. And I don't care if it's $25,000 or $10 million. A loan is a loan that you have to understand the terms. And by taking your time explaining and educating the people on that loan process, because let's face it, that's all we do. We don't sell franchises. We're second party to everything. So our goal is to figure out the best plan for them, get them funded and get a placement for the coach or a ZOR, the ZORs for the franchisors, and then wait for them to come back for the next one and the next one and the next one, because we're pretty prominent of following through. But what I found is it's really education, because they ask questions. That's a good thing, but they don't ask the right questions
Right.
sometimes. So you gotta, in lack of a better term, we take a hold of their hand and we hold it through that whole process, from pre-approval to approval to closing to funding. Someone from my office is always there holding their hand. So it
Wonderful.
works wonderful.
And that first phone call is extremely important, because these candidates are looking at a business for sometimes the first time,
First time.
and they don't know what they're doing. So Shirley,
Yeah.
tell us a little bit about that first phone call, that first interaction. What are a few of the tidbits you're trying to get from that candidate when you're trying to figure out the best loan opportunity for them?
Yeah, and so, to Dan's point, most of the folks that we talk with for the first time, this is their first conversation, their first foray into understanding it. And I think the thing that's really important to help folks understand at a baseline is you don't need to have a money tree in your backyard to become a business owner. And, I think helping folks to just understand, what does the menu look like, and that there are lots of different options that they may not have even heard about until they started this whole exploration. I think that's what a lot of the folks that we speak with initially, where they're coming from, is that place of, I don't know what I don't know. I don't know what's out there. Can I make this happen? And so, we're really just trying to help them find the path to getting there.
That's wonderful, and I know there's lots of opportunities out there for funding. There's ROBs, there's credit lines, there's HELOCs. But Sam, tell us about a ROBs. What is a ROBs? What does it stand for, and how can it help
Sure.
that candidate get into business?
Sure. First thing I'm going to say is nobody on this panel named it ROBS when you're dealing with money. That was an IRS term. It stands for rollover as a business startup. And for all you folks out there that are watching, that means accessing your retirement funds without the penalty of a distribution. What we help people do, it's a white glove treatment, start to finish. You set up that corporation where those retirement funds move into a new plan, where that plan invests money into that corporation. Much like you have your retirement funds, you buy a mutual fund, everybody has Vanguard, and you would buy shares in your corporation. So it lets that money move in there. And that works for a lot of folks. Everybody that we visit with, they have all different types of risk tolerance or different goals. This may be a vehicle if you don't want to go the debt route. You don't want to take on a loan. You want to put your own money in, and you can fund your business with your own retirement funds.
Wonderful. And real quick, if their 401k is with their current company, do they have access to get some of those funds depending on what it is, or does it have to be outside the company they're currently working for?
It needs to be outside of the company they're currently working for, Trent, so that's a very good point. But they have the alphabet for every different type of retirement vehicle, and there's a lot of ones out there. The main thing I would point out is it needs to be pre-tax. So many of those pre-tax funds can help you access that and move it into a ROBS plan.
Wonderful. And then Shirley, what about IRAs? I know there's different types of IRAs. There's a Roth IRA. What if their money's in an IRA? Does that still count towards ROBS, or does a certain IRA that you can't roll it over?
So we have a couple yes or no answers there.
Thank you.
If we have a traditional IRA, which is a pre-tax account, as Sam mentioned, the answer is yes, that would be eligible. If we have a Roth IRA, which would be a post-tax account, the answer is no, not eligible. The other one that gets a little funny is an inherited IRA. So if the IRA was inherited because a parent passed away, the
Right.
answer is no, not eligible. If the IRA was inherited because a spouse passed away, the answer is yes, that would be eligible. So keep you on your toes there.
So there's lots of scenarios,
You
lots of
got it.
roadmaps to how you can do that. That kind of leads us into the next topic on how people get funding for a business, and that's, Dan, an SBA loan. Tell us what an SBA loan is and a few of the different types of SBA loans.
I sure will. That's a difficult question at some time, but let's focus on SBA itself, not so much the lending side of it. The SBA, believe it or not, Trent, was established in 1953 by Dwight D. Eisenhower to handle the crisis with the war and to start people to become entrepreneurs. So think about this. It's an organization that's been there from 1953. It has never ceased to exist. I, for one, I'm proud to represent the SBA. Basically, what it does, clients get very confused, and I don't know, I'm sure you guys do the same thing. Well, when's the SBA going to give me my money? Type of philosophy. The SBA is not loaning money to you per se. They are backing and guaranteeing the loan for whoever the funding source may be. I don't care if it's a bank, traditional bank, a lending source, whatever it may be. All of us go to look for that federally backed guaranteed loan. And that's what the government is guaranteeing for us. The lenders are always putting the money out there, be it whoever it may be who's working with that client. But because we get that guarantee, I like to say it opens the floodgates. Because now I'm not looking at somebody who wants to borrow $250,000 and I don't have a guarantee. Okay, here, I like you, here's $250,000. With the SBA program, we know that we have a guarantee. Currently, that guarantee is at 75%. Most of us are waiting in anticipating some changes to that. We will see some new changes coming down the road as soon as the new standard operating procedures come out for the SBA. And we've been waiting, but supposedly they're supposed to be out next month, so we will see. But that SBA gives people the opportunity to get in with virtually very little money down. Open their business. Now, it is a debt service loan. There is no doubt about it. But we're going to figure out if that business can cover that debt service before you go out and do what you have to do. So SBA is simplistically just a product that you keep following the path, and then you get to that bottom number and say, okay, the business can support it. This is what we want. And there's multiple options of loans available under the SBA. Companies have different names. They're either a 7A product or they're a 504.
Right.
I have a lovely wife, as you know, and she loves to make up names for different products. Okay. We have an express loan product that goes anywhere from $25,000. Now, currently, will be at $200,000. We have what we call a dream loan that goes from $201,000 to $500,000. And then we have what we call our big ticket, which goes up to $5 million, depending on the need of the client and what they want. The last of them is the 504. The 504s are very confusing for folks because it's building, purchase, and build outs and stuff of that nature. You see quite a few of those in certain industries. Most of your service industries, other than gas stations or hotels, there isn't a need for 504s,
Right.
but they go up to $10 million. So there's a different thing. So that the product has been so strong over the years. I mean, to give you an example, 2022, over $100 billion of loans were funded through SBA.
That's remarkable.
That's crazy. From
Yeah.
all different types, our lending institutions, major banks. It's a facet to put. I don't care if it's a startup, gentlemen. That's fine. It's there for startups. It's there for expansions. It's there for mergers, buying out partners. It's unlimited what can be done as long as you educate the client, like I said previously, on what it is. What is an SBA? Some people hear those three little letters and cringe up like there's
They
no
do.
tomorrow.
They
Well,
hear,
and-
they hear the government's involved, and they
Yeah, I don't
get
want the
nervous.
government seeing what
I think for some
Right.
additional clarification too, just when we talk about the guarantee, for someone who's not familiar with what that even means, when you go get an SBA loan, it goes in the name of the business itself. So they're C Corp, S Corp, LLC. The borrower, right? So the individual and their spouse signs a personal guarantee, which says if the business can't pay the loan back, I am going to personally step in and make these payments. With an SBA loan specifically, the Small Business Administration, the government is signing a backup, a secondary guarantee that says if this person cannot make the payments they promised to, as Dan said, the government's going to come back and reimburse that bank for up to 75%. So that's why when you hear folks talk about business loans today, they're almost exclusively talking SBA loans.
SBAs.
Banks have become really dependent on that government guarantee. It's almost an extra insurance policy for them.
No, that's wonderful. And I heard Dan mention a couple names, Express and 7A. Sam, tell us kind of what the difference is between maybe an Express loan or an SBA 7A loan.
Sure. For everybody out there watching, 7A is your all-encompassing loan with SBA. It is the one that's going to allow you to go up to the 5 million mark that Dan talked about. It's also going to take all the things you possibly could want and do for your startup for the business. On the express loan, they're more reserved for, your working capital base, those non-collateralized type loans. And what I mean by that is it's not going to usually have a leasehold attached to it. In fact, a lot of the service businesses that we've worked on with you guys are express based. They're very quick, they're efficient, and they help get capital to folks very quickly. When we have the bigger projects that involve, and what's really big with SBA is the source of the funds, where's the money coming from, and how is it being used. When you get in those multiple sources and uses, that's where the 7A makes sense. You're able to put that whole package together, fund the person and all their needs, working capital. If you do have a leasehold with some construction build out, hey, guess what? You're going to get funded in that area as well. And then cover all those other things that help you be successful. That's part of that full product when you start out and starting a business.
So far we've talked about ROBS. We've talked about SBA. Now, what if you've got a candidate, Shirley, that says, hey, I have X amount of money in my 401k and I want to do an SBA, so they want to do a ROBS and an SBA. What are some things they need to look out for before they just go roll all their 401k over? What should they be looking out for?
Yeah, so the first thing they should do is talk with one of us, and we'll make sure that they
Right.
are well set up, because it's a little bit counterintuitive, but there's a point where you can be too liquid or have too much cash for an SBA lender to then come back and say, hey, wait, do you really need this loan? Are you sure that you should be borrowing this? So one of the things that our firms do is kind of help folks to strike that balance between how much do we roll over to maybe meet the qualifications that the SBA lender has in place for liquidity, but not go to the point where we've rolled over too much and now we're viewed as too liquid. So there is definitely sort of a fine line and a balancing act there. But that is, where I think our groups can really come in and help provide some coaching and assistance.
Perfect. No, I 100% agree that they do need to get in contact with the firm before they just decide to roll their funds over, because it could put them in a situation where they don't qualify, which really leads us into this next question, Dan. What is the criteria for, let's just say, an SBA express loan? What are the 4 or 5 things that minimally they need to meet to qualify?
I thought you were going to say that I didn't qualify. So I apologize. I was going to think, well, how am I going to come back to that question?
Luckily, none of us are applying.
Right.
today.
That's right. That's right.
I'm like, okay. There's different criteria for different types of loans. And I'm not just talking about me. I'm talking about the lending in general. Every bank, everybody who lends money, they all have different appetites. And knowing what those appetites are, or what gets loans approved and gets loans funded. But, criteria has also changed. There's some banks that have tightened up criteria. There's some that I work with personally that have loosened up and let the floodgates open, because they run their numbers and they see what's performing, what's not performing. You guys know that as well as I do. So when it comes to criteria, it's going to be different for the amount of the loan that people are looking. We've been talking about the Express. We do tons of those, millions and millions every year. The Express loan is a basic loan that, if you're a 685 credit score or above, you have comparable credit, is like what we like to call it, by saying, okay, if you ever owned a house, if you got a student loan that was equal or somewhere in line of that amount, unless you're a veteran, of course, then we waive that criteria. But those type of things, do you have outside income? What are you doing? And then on top, you have to remember the franchisor has a big factor in making decisions nowadays. How is that franchise performing? But that criteria is very minimal. If you have 20, to get $150,000 now, if you're setting on about $30,000 in liquidity. Now, liquidity is another question. Okay, liquidity to me and my groups are money in their checking and savings, stocks and bonds, and cash surrender value.
Right.
We will look at the retirement accounts. I don't ask people to touch that money. I say, leave it there so we know it's there, and we can use that as similar to their post-closing liquidity, where we can say, okay, they have a little money if they need it in the background. So express loans are quick, easy. We have an algorithm program. We approve them realistically, I can approve them within 2 hours, but we get inundated, so I ask for 24 hours, and our funding time period is about 30 days. That's an express. That's what I see a lot. I know we're not supposed to plug Neighborly, but that's who I do a lot of those loans with. When you get to the bigger side of it, the structures change a little bit. Anything over $500,000, and I don't want to confuse people. we look for different things. We look for additional collateral, be it on the outside. Me, traditionally, I look at real property. If somebody has real estate and they want to borrow $1 million, we're pretty much going to ask, do you have some outside income? But that criteria stays the same. The credit score is based off of SBA scoring models.
Right.
The SBA goes much lower than what lenders do. That's where people tend to get confused. I'm sure you guys have seen it. Well, I'm a 650. It says on the SBA site that you only have to be as well. That's the SBA. When the SBA starts loaning you the money, in my opinion, then you can pick the credit score.
There's definitely a difference between
Yeah.
SBA minimum criteria and what the banks and lending institutions
Yeah, are
themselves
looking
can
at.
get comfortable with. So, sometimes Google will tell you different answers than
Correct.
a banker or a lender will in terms of what it takes to qualify. But I think Dan's right. That 680 credit score, being able to put some cash into the business up front. That's one thing that's important to know. Banks do not lend out 100% of the startup costs for these businesses. So depending on the startup cost and the specific business, maybe somewhere in the neighborhood of a 10 to 20% cash injection from the borrower becomes important. And then, having the ability to demonstrate coverage, right? That if it became necessary, we can personally step in and make that loan payment.
Right, and I would add to that, when everybody goes into this process, it's where do I get started? But the franchise model is one of the very good models that's tailor-made. SBA is made for franchise lending. And a lot of things, and I'm sure you get this question asked all the time, is what about my experience? How do I do this? Well, that's where the franchise model comes in. The franchise model helps take experience that you may have had in your past and apply it into a proven model. And that's where, franchising and SBA kind of marry. I would agree with everything that my colleagues have said. But just know, when you speak to one of us, there's multiple paths. There's different ways you can access your equity. We've talked about all these different words, and I know you'll, after this, be, well, which one do I start with? Well, give us a call. Give us an opportunity to talk to you. Just know that, if you've got that 10 to 20% range, decent credit, you're looking at a franchise model, there's usually a path to get you funded.
So Shirley, let's say I meet the minimum requirements to qualify or get pre-approved for an SBA loan. What do the terms look like?
Yeah, so you will get a 10-year term with an SBA loan. That's very standard. If someone happened to be purchasing the real estate that they are operating the business from within, they'll take it up to 25 years. But 10 years is very standard. There's no prepayment penalty. So folks do have the ability to pay these loans off early if that ends up making sense for the business. Most banks out there, and I say most banks because banks themselves can set these interest rates. Most of them are using a prime plus 2.75 equation. So, these rates will follow the prime rate as it changes. And oftentimes folks are surprised to hear that they're variable rate loans for the most part.
And how often do those change?
Quarterly. They will
Quarterly.
adjust quarterly and they'll follow the prime rate when it changes.
Wonderful. Dan, what about typical timeline? Let's say an express loan, what are you seeing? Best case scenario to sometimes worst case scenario.
Express loans are relatively quick. When we ran the statistics before we came, we're at 29 days. But it varies with the client. If I have a wonderful client that sends me everything boom, 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 which, knock on wood, doesn't always happen. I wish it did. Make our lives easier. It's in that 25 to 30 day. They're up and they're in business. They got to go to their training. There's a lot of variables. The franchisor, well, you have to train them. Do you have your certificate? So, because when we fund an express loan, you're in business. That money's being wired directly into your bank account. We're not monitoring it. We're not checking it. We have the confidence that you know what you're doing with those funds. So that's a quick model. When you go into anything above that, realistically, anything above 250, if there's build out and there's things of that nature involved where we're going to be financing it for you, there's not much we can do until you have a location, till you get build out quotes, till you get your permits, till you get all these things put in place. But if it was a great scenario and they had everything, that loan should take no more than 30 to 60 days to close. But unfortunately, when build outs involved, especially in this economy, I'm sure you guys will agree with this, it has been a grueling task for a lot of people to be able to go out and do that. And that really goes from anywhere, let's say from 250 to 10 million. That's that box you're in. Any traditional lender wants to fund the loan as quickly as they can.
Right.
And they shouldn't take any longer than 60 days. But there's a lot of factors that come into play.
So Shirley, let's talk about that 60-day period from, someone signing a franchise agreement to funding. What are some no-nos during that 60 days that they should not
Yes.
go do that could derail the funding?
So, don't get a DUI.
Okay.
That's my first one.
Okay.
No felonies.
Okay.
That's another no-no for you. Try not to get divorced.
Okay.
I guess would be another one I'll
Right,
throw
right.
out there.
What if they are so excited they want to go buy a work vehicle?
I would say let's talk to your lender, right?
Okay.
Make sure you run that by whatever funding company you're working with. If your SBA loan included the vehicle inside of the loan itself, you don't want to go pay for that up front. Banks typically do not reimburse for prepayment.
Right.
If your loan doesn't include the vehicle, you probably need to go lease it anyway, right? So let's make sure you are doing that. Don't put a pool in your backyard. Don't go spend a bunch of money.
So don't go
right?
apply for credit cards or loans during
No,
this time.
don't change your
Okay,
credit
got
score.
it.
So keep things pretty status quo. I think it's a lot of the same pleas you would hear from your mortgage company, or if you were going through that process, just don't change anything
Perfect.
until we get this money in hand.
Keep the status quo. I
We
like it.
actually have comprised a list, and we call it the do's and don'ts
Don'ts.
list. And that actually goes out with their financial package, and we have them sign it. Whoever the partners, if there's partners, if it's an individual person, so they can physically see. Don't go out and buy a Mercedes Benz because we didn't include that in your debt service, or buy another house, or, don't get, like you said, don't get divorced, because any pending litigation that's against you as the client, no matter what it's for, you're no longer SBA eligible until that's cleared.
And I would add to that, there are certain situations, but gosh, 95% of these problems is communication. I think Shirley and Dan both
Yeah.
touched on that. There will be situations where you might have to purchase something early, but if you're working with your banker, you're going through the steps that they require. That's when you don't shoot yourself in the foot. So
Tell them ahead of time. In other
yeah,
words,
exactly.
Talk to,
It's talking
talk
through
to
it with the
everybody.
banker and being able to just do what you need to do to get the project done and in the terms that'll be successful for the bank. But think of all that information you've turned over either to one of our groups or the banks. Anytime you would change any of that with any of those actions, that's when it could be an issue. And you don't want to lose time. Time is what kills all deals, and we want to get you funded as quickly as possible so you can start this new journey.
Yeah, and speaking of SBA and ROBS, what are some other options people have in terms of funding? Like, is it family? Could look at HELOC, credit lines. Tell us about some of the other options.
Well, we're going to go down the rabbit hole here.
Let's
aren't we,
do it.
Trey?
Let's
Yeah,
go.
let's do
Let's
it.
go.
Yeah, really, we try to focus on the person. Trent walks in, Shirley walks in, Dan walks in. You guys all are going to have different type of things and goals. I'll start. Sometimes we walk in and folks have had a successful career. They have some money set aside for this. They've been planning for this. This is their retirement. And that's a fun time to work with them. But they say, absolutely, I don't want to use my house as collateral. So sometimes we move to the non-SBA options. I will agree with everybody else. 80, 90% of what we do is SBA backed, and it makes the most sense. But we have other, non-SBA lenders. As Dan mentioned earlier, equipment financing is a big one that you can look at doing those pieces as well as coupling it with, all the above. You spoke earlier about, Trent, about combining things. Some folks combine their ROBS with the SBA, and sometimes it's ROBS with an unsecured line, or it's, hey, I'm going to put a bunch of money here, and then I just want a little bit, for that working capital piece. So there's different options, and those comes with highs and lows. Some have more collateral that they require, some have less. And it really, when you walk in and you tell us, here's my hot button issues, we're going to tell you how we can get it done and what the must-haves have to be.
So, Shirley, tell us a little bit about some unsecured loans, unsecured
Yeah.
lines of credit, and some benefits, and maybe what maybe a benefit of wouldn't be a benefit of those. I know we've done several candidates and now franchise owners that have done those, and it's worked wonders for them. So tell us about that.
So when you hear folks talk about unsecured credit, they're really talking about personal term loans. So
Right.
these are not loans that are written in the name of the business, but they can be used for business
Correct.
expenses. And interest rates maybe are a little bit higher than SBA, maybe a little bit lower, depending on who you are, right? So this is an area where you will see the rates and the terms vary based on individuals' credit score and debt to income ratio. They go as low as 20, 30,000. They can go as high as 250,000. So some folks will use that, to Sam's point earlier, to kind of fill a gap, right? I just need to know I have this cushion to be comfortable. I have my needs set over
Right,
here, right?
right,
But I
right,
need
right.
this to be comfortable. And that's a great gap filler there. So we do see folks using that a lot.
No, that's wonderful, and kind of leads us into, our next segment here. Now, are there any situations that come to mind that are really memorable to you, Dan, where you've saved the day? And tell us a little bit about what happened.
Saving the day, huh? Actually, it happens quite frequently. People, and I think the biggest factor is this. Trent, I talk to clients and they'll go, I went to my local bank. I'm sure you guys hear this. I bank. I have all my money there. I told them I wanted to open up XYZ business, and they told me no. And that's a big deterrent for people. When it's your own financial institution that you've been banking with for years, and your money's there, and you're paying a mortgage or whatever you're doing with them, and they decline you kind of don't think anybody else is ever going to do it. My pet peeve is telling them, listen, you're doing it once again, you're not doing it right. Let me educate you. And taking that person and putting him in business in 60 or 90 days or whatever that time frame may be. And I see that happening frequently. There's always clients, I hate to say this, I don't want to be negative, but I may decline somebody that you guys may not. It might fit their box. We all have different boxes. We all use different lenders, and it's got to structure and fit it. Some businesses don't fit my box. I don't like them, so I'm not going to do them. That doesn't mean they can't go anywhere. But I love the fact that when we get out there and you get somebody in there, especially my military guys, we're very big in the Boots to Business program. And you see them because they went to their credit union, which we all know military guys have a wonderful credit union that likes to give them a lot of money, sometimes hurts them. And they can't get it, and they come back to us, and we have them in business, opening up a Mr. Appliance in 30 days. Okay, that's such a win-win feeling to create for people, and I'm blessed that we can do it. But we see it a lot. We're getting more and more because people are, realistically, they're going to their banks, and this isn't. This is a little more of a difficult situation in the finance world. We're not in 2007 again, but some things are opened, like I said previously, and some things have tightened up. And everybody deserves to own their own business if they want to.
Absolutely. Shirley, Sam, anything where y'all come in and kind of save the day?
I will add to that. Gosh, we could sit here and trade war stories
all day long.
We'll take up all the time. We won't do that. Really, it's getting to somebody who has the knowledge. We talked about SBA. There are differences in SBA lenders, and there's the preferred lender. What that means to everybody out there is that this institution knows SBA. They've done the minimum required loans, and SBA says, hey, you're good. So they participate under this program, and they make the approvals based on the program without having to submit to SBA. And sometimes, kind of to Dan's point with the local banks, their familiarity is not there. That doesn't mean that they don't serve a need. But that means that for this specific scenario, particularly in franchising, it may be best to go with somebody that's a preferred lender and can cut that timeline down. When you're not working with a preferred lender, they have to submit to SBA, and that process can sometimes get drawn out. If you've ever heard that happen with the government program.
Yeah, absolutely. Absolutely.
And the others, just make sure that you are clear that you're working with a franchise. The banks that work with franchise lending, they know what they're doing. They understand how the process works, and it's just going to cut down the timeline. And anytime we can get you into your business sooner, that's the overall goal. That's what we're all working towards.
No, I completely agree, especially with our owners that we bring in, and we recommend they go speak to the firms because this is what y'all all specialize in. So Shirley, what advice would you give for a first-time business owner looking to get a loan? What would you tell them?
My advice is to keep an open mind, not just in terms of the business models you're considering, the industries you're thinking about, the different franchisors you might be talking with, but keep an open mind about how you might fund it. You might surprise yourself that you become very comfortable with the idea of investing your retirement money in your own business instead of having it invested in Sony stock. Where yesterday, if someone would have said, hey, think about retirement money, you would have told them they were crazy.
Right.
So
Sure.
I think that really just keeping an open mind and learning, being open to getting good data to make good decisions with is probably my best advice.
Yeah, I agree with you. It's just they really have to keep an open mind. So you have to look at it And we have to look at it and kind of say, okay, maybe some people don't like that service. Like I said earlier, some people do. I come from a family of entrepreneurs, and realistically speaking, my dad was the one that actually got me into banking when I was young. He said, son, you don't get rich using your own money. And that encouraged me to go into banking, to be able to lend and be able to get out there and do it. But it's all about knowledge. It's call one of us. It doesn't hurt. It doesn't cost any money to learn what would be best for you. If a loan's not right for you and a Rob is, then that's by all means, that's what you should be doing. If you just want a personal loan and do an equipment lease, as long as those numbers project for you to make money in that business, then that's what you should do. You can't limit yourself to one product. You know, I don't tell people to just do an SBA loan. Here's the product. What do you want? And the biggest question I ask is, what does your wife want, by the way?
Correct.
Okay. And that's basically it.
No, I know there's lots of options out there in terms of how somebody can fund a business, and it's great having advice from three experts in the industry right now. But and I know y'all all work with lots of clients. Sam, tell us how you partner with Neighborly.
It goes back to kind of the theme here today, Trent. It's we partner with Neighborly as a resource. You know, our firms and what we do, we're the conduit. We're the connection to help get capital funded. But at the same time, it's answering the hows and the whys, simplifying this process to make it easier for folks to get in and start their business. And so everything that you've heard today, it starts with a conversation, and it starts with the person that's on the other side of that phone. And so what we do for Neighborly is just continuing to be a resource in those areas, but also things change. We've seen a lot of that change as the rates have gone up in the last year and a half, 2 years, and just making sure we're ahead of the curve. As Dan spoke earlier, we're about ready to have a new SOP for SBA, and any of you folks out there want some good nighttime reading, it's about a 500-page document.
There you go.
Cure your insomnia.
Put you right to
Right.
sleep. But, you know, understanding those ins and outs, and just being transparent with how it affects, you know, the franchise, how it affects the bank, how it affects the person that's ultimately taking out those funds. And so it's really the communication of all that so everyone can make an intelligent and informed decision.
Yep, Shirley.
I think it is, about the education. You all do such a good job of laying a foundation of information for your franchisees that when they come to us, they have a good feel for what they're looking for, and they have good expectations of what the cost can look like. So we can sort of seamlessly plug in and say, hey, here's how we've done it before, right? Here's how other folks have been able to get access to this capital. We've got the path for you. So it does tend to be pretty seamless that way.
Yeah, Dan, tell us about y'all First Financial's relationship with Neighborly.
It's been a long time.
It has been a long time.
Long time. I was telling Brad out there, our very first Express loan 12 years ago was to a Neighborly client. That started the Express loan package when we were first putting it together. Up until the COVID era, if you remember, we had an office inside Neighborly. We believe very strongly in all the brands. We always have. We have a lot of meetings with you guys, talking things out, and I always know when there's a problem. I see Brad's number come up on one of our cell phones. So it's just the teamwork that we have with you guys. It's pretty simplistic. We know all of your models so well that is all we have to have is the client tell us, this is the model, okay? We understand it. We know the FDD. We know everything. We know how long it's going to take. Do they need it? We know if they need a location, don't need, they need a vehicle. We already are going looking that way. So it's just, I think for me, it's a little bit different because it's been such a long relationship. Unless you guys change something without telling us, we know what to expect before it happens. So, and it's been a wonderful relationship, other than me coming here this time and not getting here on time. But other than that, it's been a fantastic time. We've been out to the campus, I called it at Waco, numerous times. And when you have a great organization to work with, we're a team.
I know we have all three of y'all's numbers on speed dial, and y'all are wonderful resources for not only Neighborly and our candidates coming in, but also the franchise owners that we have now. That's one of the things at Neighborly that we're extremely proud of is our Pro Trade Net network and all the vendors and relationships we have with all of them. I believe there's over 200 vendors that our franchise owners have access to get rebates and discounts on everything that they need. Again, thank you all so much for joining us today. We appreciate your insight into financing a franchise and the way Neighborly can work with you to help get our owners and prospective owners the financing they need to get off the ground and stay successful. Thank you all for tuning in. This has been really great information, and hopefully those of you watching got some great insights and tips on the best ways to financially plan for franchise ownership. When it comes to franchising, we know there are many opportunities out there to consider. We hope you can see the kinds of thought leaders and resources you have access to when you work with Neighborly. When the time comes and you're ready to explore franchise business ownership and possibly Neighborly in any one of our 19 North American brands, you can visit our website at franchise.neighborly.com for more information, or you can reach out to us directly. We're always willing to help guide you on your journey or get you in touch with one of our experienced franchise developers. We've also provided a QR code, which you can see on screen now. This will take you directly to the Neighborly franchising site I just mentioned, and if you would like to learn more about the partner companies we heard from today, here are their website URLs. Please check those out and get more information on options available to you. Before you go, there are a few other reminders I have for you. A replay of this webinar will be available on our website, so you can rewatch as many times as you'd like. We'll also provide the replay link via email for you to review or share with someone else. Be sure to check your email for information and to register for our next webinar. Thank you all for watching.